Good day, good afternoon, good evening, good morning from wherever you are watching from. I feel super excited today to be sharing this great time with you, analyzing the market. It's always an intriguing and interesting time for me, to be here with you today. Yes. So yeah, guys, let me know where you're watching from. I want to feel the vibe in the room. I can see Crypto Lord. Yeah, Crypto Lord is 6 p.m. already, and we are live right now. So Crypto Lord, let me know where you're watching from. I can see Naldin. Let me know where you're watching from. He said, "Oh, hello, Naldin from Kenya." Yeah, thank you for joining today's live. So yeah. While others are joining us, please do well to share this with your friends, share this with your colleagues. Let them come and join us because today we'll be demystifying the market, understanding price action, market structures, and how the news impacts the market. Yeah, Crypto Lord from Nigeria. Awesome, awesome. I can see George from Ghana. Sounds good. So the house is getting complete. I can see Rajev from India. That name sounds familiar. Looks like you've been a good attendee or participant in our programs. Awesome. I can see Kiki from Colombia, South America. Awesome, guys. Awesome, guys. All right. So today we'll be looking into analyzing the market. I know many of us, in our trading journey, one way or the other, we might have encountered, questions like, how do I know when to buy? How do I know when to sell? How do I even analyze the market as a whole? How do I identify the next market direction? Okay, so I am here to help you understand that. Awesome, I can see the vibe in the comment section. Thank you, thank you, thank you. So great. There is one thing I do when I want to analyze the market. It's called the top down approach. All right, the top down approach. Okay, now one interesting thing I want you to know is that there is not one size fit all strategy, okay, to becoming a profitable trader. All right, I come again. There is no one size fit all strategy, for becoming a profitable trader. All right, becoming a profitable trader stems from you identifying what works for you. All right, and in today's session I will be sharing what works for me, how I make money trading. All right, and I'm starting with market structure, which is the top using the top down approach. So let's go down to the monthly time frame. Good. Here we can see on the monthly time frame, all right, we can see on the monthly time frame here that market has been on an overall downtrend. All right, market has been on overall downtrend, which means market have been sliding down. We've been having an overall downtrend, for a long time now. So firstly, you want to identify what is the current market structure. Firstly, the market is in an overall downtrend. Secondly, we also want to mark out levels of support and resistance. Now, by identifying these levels of support and resistance, it helps you to see where price had gotten to in the future. I'm sorry, in the past. All right. So the past can now help you to predict where price would most likely get to. Okay, so now at this point now, our next step after identifying that the market is a downtrend is to map out levels of support and resistance. Okay, so when we come here, we can see vividly that price had touched this level, all right, and picked back up, all right, and price finally broke out of this level, came to this level again, could not break out of the level. Why? Because the level was previously a support here, and this level had now turned to a resistance here. All right, this level here also is a resistance. Okay, now by looking at this now, we can see that this level, which my cursor is on now, is a support turned resistance zone. Okay, which means price would most likely always respect this level and always reject price from breaking through it whenever price comes to that level for the first time, all right, or at any time. Because if you look at this angle here and see what price did in this place, you will discover that this level was a support level. Then price came down, touched this level, could not break out of this level, all right, and price went back up. Then price came down again, touched this level, could not break out of this level, then price went back up. Then price came down again, touched this level, could not break through this level, then price went back up. Now you can see that obviously this level is showing that there is so much buying power at this level. All right, so this level is identified as the demand zone. The support zone is also called the demand zone. All right, which means buyers are buying up every price that comes down to this level. Okay, however, there is something I do emphasize on, okay, which is more like an eye opener. When price keeps touching a particular level, either be it support or be it resistance, but in this case here we have support level. So now when price keeps touching this support level consistently, which it had done here, touched it once, touched it the second time, touched it this third time, what is automatically happening here is showing that sellers are strongly interested in this level, and the more price comes to touch this level, the weaker that level becomes. The more price comes to touch the level, the weaker that level becomes. And when the level now becomes so weak that it couldn't resist price again, what would the market experience? A breakout, which the market experienced here. All right, so we see that the market experienced a breakout at this level. And what happens now? This level that was previously a support zone is now turned resistance zone. All right, if you are following, let me know in the comment section so that I know that you are following. So this level that is previously a support zone has now turned to a resistance zone. Okay, and that is why this level becomes a key level. This is the top down approach. Now I'm starting from the higher time frame, I'll be going down to the lower time frame, then we position for which direction the market would most likely go through. All right, now if we see what happens here now, then markets broke out of this level, all right, then came back to now test that level again, that support turned resistance zone, and find it difficult breaking through that level. The market dropped again, came up here to test that level again, find it difficult to break through that level, the market dropped again. All right, now obviously here now we can see that market has dropped below another kind of level. So here we now come and continue to map out our levels of support and resistance. So there is a minor support and resistance here. Here is a major support and resistance. All right, this level is a major support and resistance. All right, so this level as well, where price just got to here now, is also a major support level. All right, now so here is where our price currently is. Our interest is how to make money from the next market move. All right, good. Thank you very much, Frank. I see you are following. You said your voice level is clear and easy. Good job. Thank you very much. So let's go down to the weekly time frame. Now let me recap what I did on the monthly time frame. On the monthly time frame, I identified the general market direction, which is downward sloping. Number 2, I mapped out levels of support and resistance. Okay, so for some of us, where price created a footprint. Okay, levels of support and resistance is that level where price created a footprint. Okay, and now that price created a footprint at that level becomes significant to observe. All right, so good. That was why we have marked out these levels on the monthly time frame. Now let's go down to the weekly time frame. So coming down to the weekly time frame, so we can see that on the weekly time frame here, price is currently pushing up. All right, now if you observe that on the weekly time frame, there are also other support and resistance zones on the weekly time frame, which we are going to look into. All right, good. Let me know if you are following in the comment section before we push forward. So right now we are mapping out levels of support and resistance on the weekly time frame. All right, now if you look at it now on the weekly time frame, we have these levels of support and resistance. Okay, we have these levels of support and resistance. We have these levels here. So you can see this level is very, very significant also. This level is very significant, very, very significant. And that is the current level where price is trying to head to. All right. Now we've been able to have a closer view of what price is doing. Okay, we've been able to have a closer view of what price is doing at this level. So let's go down to the daily time frame. The daily time frame. Can you see the daily time frame now? Now the daily time frame is painting to us more clearer picture here. Okay, more clearer picture. And this clear picture that we see here is indicating to us how price or market is reacting at a more current level. Don't forget, we are coming from the monthly time frame down to the weekly time frame, now down to the daily time frame, which means on the daily time frame, the daily time frame is keeping record of daily activities in the market. All right, so as of today, this is what price is doing. What price did yesterday is this red candle here, and what price did on Tuesday is this green long candle. Now, if for those who have been following the FX market, on Tuesday we had CPI news came out on Tuesday. All right, and when CPI news came out on Tuesday, we saw how price jumped up, moved up strongly against the dollars. All right, generally in the overall market, price already comes to touch this level, and this level is a support level. Hence, there is a higher probability that price would go up already. Okay, price would go up, then reverse at this next resistance zone. So this is what the analysis would look like. Price going up, all right, and then shooting down. Can you see that? Can you see that? Price going up and then shooting down. Because if you look at the overall market movement, the overall market movement is bearish. All right, which indicating that for Euro USD, the market is bearish at the broader level, at the weekly time frame. Okay, at the weekly and the monthly time frame. But when we come closer to the intraday traders now, you could leverage on the minor support and resistance zone to catch on price movement. All right, so what we are expecting for price to do now is to move from here to here. All right, this is what we are expecting price to do now. Okay, so if you're going to take this trade, you are looking to sell from let me write it down. You are looking to sell from the current market price, which is 1.08562. Okay, from within this 1.09780. Okay, you are looking to sell Euro USD between this level. So the more market stays on this level, it's a sell signal. All right, and then you are also looking to your target profit, your take profit level. Your take profit level would be somewhere here, okay, which is 1.04947, and then your risk management to stop out, your stop loss should the market goes against you, or goes against our analysis. You want to look at market stopping out at 1.1. Okay, let's do this. Okay, yeah. Okay, you're looking at market stopping out at this level, 1.110, 11014. So these are the level. This would be your target level. All right, so you are looking to sell between this current price level to this resistance level here that has been mapped out, this black line here. You're looking to sell either from here to here. Either you sell here or you wait to see if price will get up here. All right, so if you look closely now on the daily candlestick, if this candlestick closes this way, all right, this is it's gonna form like a pin bar, a bearish pin bar. If it closes this way, it's like a confluence of a sell signal already. Okay, if it closes this way, which it would most likely do, this already almost closing of the day. So in few hours now the market will close. If it close lower to this level or close at this level, it's a signal to sell off, all right, on Euro USD. And that is what we are looking at on this particular market. Okay, now let's look at let's go down to the 4 hours time frame. Okay, let's go down to the 4 hours time frame. Let's see what's happening on the 4 hours time frame. So now we can see that on the 4 hours time frame, market had break out of this level here. So this is another minor zones. Some minor zones. Market had broken out of this level. Okay, these are minor zones. some minor zones on the 4 hours time frame. Good. So now we are on the watch on what Euro USD, where the price will close on this level. Like I said, if you look at it on the daily time frame, showing you that a bearish pin bar is being formed, and then when you look at it on a 4 hours time frame, you are clearly seeing more closer activity on what is going on in the last 4 hours. All right, and this is very important in your analysis. When you do that top down approach, it helps you to also leverage on multiple time frame analysis to be able to see clearly into what price is doing and what price had done in the past to what price is doing in the present, in order for you to be able to forecast or predict what price would most likely do in the future. All right, so from here we are going to be selling, from this level to this level. We just consider it as a sell zone for Euro USD. Let me just create, okay, good, to buttress my point clearly. So yeah, from this current level to this level where price, let me change the color so that we can see. Good. So from here up here, it's a sell zone for Euro USD. So whatever Euro USD is doing at this zone is going to drop. There's a higher probability that it's going to drop, and that's why I'll be shorting it, selling off Euro USD from this level. All right. So let's look at it from the 1 hour time frame to also see clearly what is going on. Oh, Crypto Lord said CPI ruined my account. Sorry about that. You have to just watch out next time and use some level of risk management. So when you look at what price is doing here, obviously you can see how price is consolidating at this level already. This is more like creating some consolidation. Okay, and when you look closely to what price what our candlestick, the last 3 candlesticks, you can see that the last 3 candlestick, one of it is the bearish pin bar, then a full bodied engulfing bearish candle. Okay, and then we have another 1 hour candlestick currently forming out from this level. All right, this is saying a lot about price movement from this level. All right, so I would open the floor for us to ask questions now based on what we have here, while we move to analyze other currency pairs. So it's time for questions and answer. If you have questions based on what I've talked about, please do well to drop it in the comment section. All right, I'm waiting. If you have any question, please do well to drop it in the comment section. Okay, so I'm expecting questions. They're not coming in yet. All right, so we'll just go straight to analyze the market on USD JPY. Okay, USD JPY. Let's check out USD JPY. USD JPY. Okay. So we can see we are on USD JPY now. So yeah, someone is asking, do we wait for Euro USD or can enter now? So like I said, from the chart, Euro USD, you can decide to enter now, and you can decide to wait to see what price would most likely do. All right. So you can decide to enter now. Like I said, anywhere around this orange box is a sell zone. All right. Anywhere around the orange box is a sell zone. Say after analyzing the market, how do I confirm before I enter? That's what we've just done here now. Okay. So maybe if you want to confirm, all right. So you look at this now. Price is ranging in this box here. Okay, if you want to confirm if it is a sell, you want to wait to see price break out through this level. All right, you want to wait to see price break out through this level. Maybe when price break out to this level, you can be convinced of a sell. So that is another confirmation. All right, but if for the general overview, this box here is a sell zone. All right, so anywhere within this place you sell is going to sell. Okay, so however, you have to also put in your risk management, and that is why I dropped a possible place you can set out your take profit and your stop loss order. All right. So good, so this is what I'm looking for. So here most likely what you can do. So let's go down to USD JPY. USD JPY. Okay, so for USD JPY now, let's check out the monthly time frame. Now, I would implement my same strategy of top down approach. All right, and okay. So when I was talking, or when I was making analysis on Euro USD, I said something about top down approach, having to come to the higher time frame to check on what the market, where the direction of the market is leading on the higher time frame. And on the higher time frame, you can see that the market direction has been upwards. So let's now map out key levels of support and resistance on the higher time frame. So on the higher time frame, we have fewer key levels here. Okay, so good. So here we also have a key level, because this level where price came and got rejected, and went back, became a key level. So these are key levels we are going to look at. So of course, you now discover that USD JPY had broke out of that key level. Okay, you can discover that USD JPY had broke out of that key level, and definitely from the overall higher time frame or monthly time frame, we can see that USD JPY is bullish. All right, on the higher time frame, on the multi time frame, USD JPY remains bullish. All right. Okay, now let's go down to the weekly time frame. Now the weekly time frame will now give us more clearer view into what is happening. All right. So here we can see that price came, touched this level and reversed. Okay. Then went up here. We can see that this level here is a minor resistance zone. Okay. However, we can see that it also formed a pattern called the double bottom. Okay, so what we call the double bottom. Okay, this is what we call the double bottom. All right. Now, when a double bottom is spotted, it's showing it's a continuation pattern. All right, that indicates market bullish momentum. Okay, it's a continuation pattern that indicates bullish momentum. So whenever you see Euro US, whenever you see USD JP, what's it called? Whenever you see double bottom, okay, on the charts, there's a higher chance that the market would go higher. Okay, so here we've been able to spot out the double bottom on the weekly time frame. Now here we see how market broke out of this level, okay, and now consolidated a bit. Last week we had a full-bodied bullish candle, all right, and here this week we are having another candlestick already forming. So now let's go deeper into the lower time frame, the daily time frame, to see what is happening on a closer range. So we can see from here that the market has been going higher from this level, all right, and has broken out of this zone. This was the candlestick that broke out of it. Let's zoom in. It was a candlestick that broke out of it, then it came to retest and then consolidated a bit, and later now we saw a bullish power came in at this level, and then market went down a bit, and now we can see how the market has been pushing up. And currently we see what is going on here. So at this level here now, we see a little rejection coming in at this level, showing that there is a bit of buy momentum at this level. Okay, there's a bit of buying momentum, buyers at this level trying to push price up from this particular level. All right, from this particular level. So for USD JPY now, USD JPY is giving a buy signal on the higher time frame. All right, it's giving a buy signal on the higher time frame. Okay, Monday Williams, I don't know if your question is meant for USD JPY or Euro USD. So you can just said at this point of price consolidation, what do you think would happen? Do you mean on USD JPY? So that I can clarify. So let's go down to the 4 hours time frame, okay, to see more clearly what price is doing on the 4 hours time frame. So clearly we can see that, okay, price consolidated at this level on the 4 hours time frame, and then price started going higher, got to this resistance zone and was pushed back. Okay, then price picked up from here. Okay, price picked up from here, went higher. Now one of the things that we see here is that price got to a level it had never gotten to before in a long time. I go back to the monthly time frame so as to show us the market clearly. So you can see that price is at a level that it has never gotten to before in a very long time. Okay, and that is why you see what happened on the 4 hours time frame at those levels. Okay, where price got to this level now and was pushed back strongly. okay, and then started moving slowly, and got back to that same level again. You can see it now. Got back to that same level again, and then was pushed back. All right, now this says a lot about this level, because this level now is now indicating a strong resistance zone. Okay, a strong resistance zone. Now, while this level also is also indicating a strong support level, because it keeps pushing price up from here. So this is giving an indication that on the 4 hours time frame, Euro USD is a buy. So you want to buy Euro USD from anywhere within this range to the target level. Now you see how I'm putting in um the take profit level and the stop loss level at support and resistance zone. So for the take profit level, I've put it at the next resistance zone, okay, and the stop loss, I've put it at the below the support, okay, that is closer to my entry level, because of course I want a situation whereby my risk to reward is not much. All right, so which means I want my reward to be more than my risk. Okay, and that's it. So that's why I'm putting it here. So buying can come in at any level from here. All right, you can buy at any level from here, because from market movement we are seeing that USD JPY would be bullish. All right, so I'm opening the floor now to questions. So if you have questions, please do well to ask. Do well to ask your question. If you have questions, do well to ask your question. Let's go down to the 1 hour time frame so that we can see more clearly what price is doing. Now you can see that obviously now from this level here, on the 1 hour time frame, you can see that the buying power came in at this level, which is that level where we've tagged a support zone, a buy zone. So price touching on that level, and then the buyers pushed price up. Okay, so we're expecting to see price move higher from this level to the next resistance zone. So the floor is open for questions and answers now. It's very important that you ask questions, because that's only the way you can get better. All right, that's only the way you can get better. Please ask questions. Ask questions. Ask questions. Any question? Any question? The floor is open. The floor is open. It's time for questions. Okay, I'm expecting questions. Okay, Eric said this is well understood. Thank you very much. I'm glad you perfectly got the insight of what we've been talking about. So, sure. So you can use any other tool to confirm your entry. All right. It's all about you having to be comfortable working with those tools, and how far you've been able to backtest them to see that okay, the indicator they give is actually giving you a higher chances of entering a winning trade. So you want to also maybe backtest it to see how the RSI can be helpful to signaling an entry for you. I don't know if that is clear, George. So this is pure price action. All right, pure price action. So if you have other tools you feel you when you use it, it will give you a more confidence in trading. It's part of a way for you to develop your own strategy and identify what works for you. So your lot size depends on your capital. Okay, you don't, let me remind you that when you are using one lot size, okay, when you're using one lot size, that is equal to $10 per pips, okay, per pip. And when you are using 0.1 lot size, that is equal to $1 per pip. And when you are using a 0.01 lot size, that is equal to 10 cents, okay, per pip. So imagine you are using a one lot size on a $100 account or a $1,000 account. You would not survive any move against your account. It will blow up. All right. And if you are using a 0.1 lot size on a $100 account or $200 or $500 account, it's risky as well. Okay, because any move, serious move against you, you might lose your money and lose a lot of money. All right, so you need to use a lot size that is comfortable, that you are comfortable with, and also suitable for your account size. All right, so if you use okay, let me just give a quick analogy and maybe we'll round up from there. So trader A traded with a capital of $5,000. Okay. Trader B also has the same capital of $5,000. Okay. Now, trader A lot size is 1. Okay. And trader B lot size is 0.1. Okay. Both trader loses 100 pips. Okay. Both trader loses 100 pips. Are you following my story? Both trader loses 100 pips. Now, for a lot size 1, we said one lot size is $10 per pip, right? So let's multiply 100 pips times 10. So losses in USD will be 100 pips, all right, times $10. That is $1,000 lost. Okay. Now, for trader B, it's a different ball game. 100 pips. Now, trader B is $1 lost. So $1 times 100 pips, that's $100, which means that trader A account balance would be $4,000 after the loss of $1,000 on the same 100 pips. And trader B balance would be 4,900. Now, which of these two traders will recover from their losses faster? Which of these two traders will recover from their losses faster? We are rounding up already. I'm waiting for response. Which of these two traders will recover from their losses faster? So, good. Trader B recovers faster, while trader A would have to struggle. If he is not careful, if trader A is not careful, trader A will end up blowing up the account. Why? Because trader A might begin to be moved by impulse or by revenge to be able to get back the $1,000, but trader B can comfortably just take few other trades and still recouple back his loss and get back to his capital of $5,000, on just few trades and taking lesser risk as well. All right, so you want to be that you want to be you can only trade what you are comfortable with. All right, I would recommend you trade what you are comfortable with. Okay, so if you feel trading with one lot size would still become you are comfortable with it, you don't mind losing your $5,000, trade with it. All right, but if you are conscious of risk management and you are putting that into check, you want to avoid using one lot size one lot size on your account that you are not comfortable using. All right, so it depends. So the person that asked me what lot size did I use, it depends on your account, and we have already have a practical example of two traders using two different lot size. So you can pick which trader you want to be. Either you want to be trader A or you want to be trader B. Awesome. So while I round up, someone is asking, could you put again the Euro USD chart? I got a chance to see blah blah blah. Okay, so let's go and say Euro USD. Good. Okay, so Kiki, can you see the chart now? I believe you can see the chart now. You've been following. Okay. Someone is asking, what happens when there is an impact news with your entry? So of course, I do advise, and here is it: don't trade 1 hour before the news and 1 hour after the news if you are not comfortable with the massive volatility that happens before and after the news. Okay, so there's always market volatility, and if you are not careful, you lose concentration on which direction of the market you want to go. You might end up blowing your account. So you don't want to pick trade 1 hour to a very impactful news or 1 hour after an impactful. You want to wait after 1 hour, and you don't want to trade before 1 hour to the news, and you want to wait after 1 hour after the news before you can take your trade. So that is to answer the person who asked what happens when there is an impact news with your entry. So you have to watch out. Go through the news calendar on Octa FX news calendar or economic calendar. You will see the news there. You can set out your time and know what time, the time frame within the day which you can trade comfortably. All right, except you are comfortable trading the news, don't trade the news. Okay, so I want to ask you a few questions. If you got value from this session, please drop a comment in the comment section. If you want more of this section from Octa FX, equally drop a comment in the comment section. Also, one thing is, do yourself a favor to subscribe to our YouTube channel and also click on the notification button in our YouTube channel, and this would help you to be able to stay in tune with all our webinars. I believe you've gotten value at this session, and I look forward to seeing you in our next session. Thank you very much for joining us. Thank you.